Well, holy smokers, this ain't no jokers. Look at this, guys. This is a rare video in which, oh my gosh, you're looking at me, I'm looking at you. It's not like a slideshow video. But here today, I got a real treat for you guys, okay? This is definitely gonna be a video you wanna make sure you watch all the way through because I'm giving out ridiculous amounts of value in this video here today. I'm gonna take you through on the whiteboard exactly how I find my next $1 million stock. And I don't, when I say like my next $1 million stock, I'm not talking about the next stock I put $1 million into. I'm talking about the next stock I put $100,000 or $200,000 into and grows into $1 million stock over time, okay? So that's what we're talking about here today. This is gonna be a long, very in-depth video. We probably won't do very many cuts in this one. I even brought a bottle of water, which means this is about to be an in-depth video. This is a serious, real deal Holyfield, okay? So I hope you guys enjoyed today's video. Like I said, this is how to find the next $1 million stock. This is the type of content I usually only put out for like folks that are in my private group and things like that. So, you know, the fact that I'm putting this out on YouTube for free, I hope you guys really enjoy it. You can, you know, show me some appreciation and also help out the channel by smashing the thumbs up button. And let me know in the comment if you enjoy, you know, content like this. Ultimately, in the end, we'll see what type of views a video like this gets. Doubt it'll get as many as some of the more interesting videos, but this is honestly the type of stuff that's really going to make you a lot of money in the end. So anyways, hope you guys enjoy this as always, okay? So when I'm thinking about finding my next $1 million stock, first off, we're talking about growth investing, okay? We're talking about really growth investing. This is not value investing. This is not dividend investing, okay? You're not going to put 100K into a value stock and it grows into $1 million. You're not putting 200K into a value stock or dividend stock and it grows into $1 million unless you're in that stock for, you know, 20 years or 30 years or something like that, and the company executes on a high level for 20 or 30 years. It's pretty unrealistic, okay? If we're talking about the type of stocks that are going to 5x our money, 10x our money, or more, okay, we need to growth invest. We need to find companies that can consistently grow revenues, okay? This is very important. They have to grow revenues by 10% or more for just as far as I can see, okay, for years and years and years and years to go in the future, okay? Value stocks, sometimes you can find a good value stock and you can make 50% on it, 100% on it in a matter of a few years if you get in at a very undervalued price when the stock's beaten down. Sometimes you can play turnaround plays. Like I've played a lot of turnaround plays that have made me good money in the past, you know, just on the YouTube channel, right? Elf was one that I got in last year. That was a turnaround play that has kind of started to develop into a growth stock. And that one we've been able to capture well over 100% gains on that one in less than a year, right? Fizzy Get Dizzy, that's another example of like a turnaround slash value play. One of my newer value plays is Cheesecake Factory. Those aren't the type of stocks that are gonna 5x and 10x your money in the end. They just aren't. There's some potential there. There's some potential to make a lot of money in a short amount of time, but not like 5x, 10x type money, okay? The best example of a stock that I've invested in the last couple of years that's obviously gotten, you know, huge gains would obviously be Tesla stock, okay? You know, that's kind of the poster child of kind of this YouTube channel and kind of that type of stock where, you know, we 5x plus our money in that particular one, might even a 6x plus our money in a matter of about 2 years. So if we're looking for these type of stocks, where the heck do you look for them in the end, okay? So one thing I will say here on YouTube, I want to give some YouTube creators some respect, okay? Some YouTube creators, you know, actually put out some good content around some growth stocks that actually have some potential, okay? Now, the thing is about YouTube, you have to sift through a lot of content and a lot of creators and a lot of people, you know, I don't want to say it's a bad thing, but let's be honest. A lot of people have jumped onto the YouTube bandwagon and started YouTube channels that might not even know what they're doing in the market. You know, I've been in the market for over 10 years. I have a successful track record. I've been on YouTube for 4 years plus. People can see every stock I've ever bought or sold on this channel. There's a lot of people that have jumped on the platform because they've seen people like myself and others make really successful YouTube channels and make a lot of money from YouTube as well from all the ads that are played on these videos, right? And they've jumped on and they're like, oh, now I can talk about stocks because I want to be, you know, big like Jeremy or one of these other YouTubers. I want to be the next Graham Stephan. You know, cool, right? But at the end, like some of those people might be leading you down some really bad stocks, okay? And this is where you have to know what you're doing. Just because you hear about somebody's buying a stock doesn't mean you should be going out there and buying it. Like make sure you know what you're looking for in these stocks. That's the biggest thing in that. And if you don't know what you're looking for, you're gambling money, okay? There's a reason I have this picture, not just because it's my city, Las Vegas. The other reason I have this picture up here is to show you, that's where you go and gamble, okay? What we're doing here, this isn't where you go gamble money, in my opinion, okay? So, YouTube, you can actually find some creators out there. For example, when I was really looking super in depth on Tesla, when I was looking at it, I looked at Tesla for about, since the company went public, I think was in 2010, 2011, right? 2010, I think it was. And I tracked the company since then, but I started really looking super in depth into Tesla in terms of, I'm going to actually think about putting my money in this. In about 2018, I came around creator channel Hyperchange, right? Galileo. And Gally, man, he had some super insightful videos on this stock named Tesla, right? And between all the research I was doing in the stock, brushing up on all the financial reports, the conference calls, looking at where Model 3 production was at that particular time, because that was something that was ramping, looking at, everything I was looking at as far as research in the company, along with watching his videos, I began to just understand this company has like massive potential. Like this is a potential 5x, 10x plus stock over the next 5 to 10 years. I should probably start buying the stock, and I started accumulating position. So there definitely are some creators out there that make some very good content that are actually very bright and know what they're doing out there, okay? So, YouTube's a good place you can look. You can look other places like, obviously the financial networks, you can, go on CNBC and some of those type of places. The issue is with those type of networks, you really have to sift through a lot of stocks. The good news is, if you watch, a 10 hour straight of CNBC, you're going to see and hear about a ton of different stocks, right? And they got the stock ticker thing that goes at the bottom of the screen. You can be like, oh, let me look into this stock. Oh, there's a tickers there. Let me look into that stock. Oh, they bring on this guy who's talking about this stock. You can, go ahead and research it. You can research a lot of stocks. Now, the thing is, you're going to have to do the research work in the end, no matter which route you go, okay? I could tell you a place I'm getting like half my stock picks now in terms of companies to look into, and then like, oh man, I might actually buy this stock. It's actually my own private Discord now. The Discord I have in the private group, these people are actually bringing a lot of stocks. If you think I'm the only successful investor, you're hardly, you're making a big mistake. I know there are people in the private group now that are getting even better gains than I'm getting. I think Fidelity has us calculated at a 70-something% ROI in the past 1 year on the public account. And we have people that are beating my returns in there. Some very high-level thinkers. I'm getting about, literally half my stock picks now from my own Discord chat. Now, obviously, some of you guys won't have access to that. And, it is what it is. Seeking alpha is fairly decent in terms of getting some different stock ideas out there. Some are going to be garbage, some are going to be good. But no matter which route you go in terms of growth stocks, and we'll talk about what to look for in some of these stocks, no matter which route you go, you can't just buy blindly. You can't just like read an article what somebody wrote and be like, I'm buying that stock. You can't just hear somebody go on CNBC and say, oh yeah, this stock's, some analysts on Wall Street from JP Morgan say, well, this stock is $45 today and we think it's going to $60 over the next year. And you can't just be like, oh, let me get in my account, let me buy this stock. It doesn't work like that, man. You are gambling money. If you don't know what you're doing, you are gambling money. You have to come to grips with that right now. It is super, super important. Some people get lucky and they buy a stock off a recommendation, whether it be off one of my videos or somebody else's videos or one of these, and they get lucky. That's pure luck. You just gambled money out there and you got lucky. You've got to really know what you're doing in this. You can't just, long term, it's not a viable option. It's not going to work out for you long term if you're gambling money around. That's just facts, okay? So these are some of the places you can look for stocks. There's other places than that, but just there, you can get so many ideas. You could even Google S&P 500 companies and go through the entire S&P 500 and look at what companies have growth. You can go to, something like Yahoo Finance, go to the analyst tab, and you're actually going to get to see, what the company's grown revenues by in the past and what analysts expect the company to grow revenues in the future. And then you can start researching from there. Oh, this company has 25% revenue growth and analysts expect them to grow 35% next year. Let me look into this company a little deeper. Go to the investor relations page of that company, start doing some research work there, okay? So there are definitely plenty of ways out there that you can come across stocks. There's no shortage of how to find stocks out there. It's one of the silliest questions I get sometimes. People will be like, Jeremy, how do you continue to find stocks to look into and whatnot? I'm like, dude, it's not hard. Like, there's a million stocks being mentioned all over the place. It's just up for you to actually, pay attention and look at the stock and be like, okay, let me do a little bit of research. Do I see something I like there? No. Okay. Then, the research ends. So let's continue on here, essentially. So let's say we find, our growth stock. So we find something that seems really interesting to us and we start researching it, okay? So you might have heard a stock mentioned on the YouTube channel, on, CNBC or wherever it is, okay? So you hear about this stock, XYZ, and you're looking at it and you're like, this looks pretty dang interesting. So what I like to start with is the business first, okay? Do not worry about this. This is such a cardinal sin of stock market investing, in my opinion. People worry about financials, statistics, metrics before they worry about the business. I can always tell a lost investor when they bring me a stock and they start out with telling me the trailing 12-month PE and the price to sales ratio and intrinsic value and blah, 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 and they haven't even talked about the business yet. That's a lost investor, okay? You always, if you really want to make a lot of money in the stock market over time, you better always start with the business first, okay? Guess what any great investor, business person will ever tell you is the most important thing. It's not some magical metric. It's not some financial statement, okay? All that stuff's important, but always the most important thing is the business first, okay? So you need to understand that business on the highest level possible. You need to understand that business in a way an executive would, for instance, okay? And the only way you're going to be able to get to that level, where you understand the business on such a high level, the only way, okay? Let me be very clear about that, is by doing the research work. You must read the 10K annual report. You must read the latest 10Q. You must listen to the latest conference call, not once, but twice, okay? Always listen to conference calls twice. I've been in this game for over 10 years now. I always listen to conference calls of companies I really care about twice, okay? Or a company I'm gonna buy. Why? Because a conference call is 30 minutes to 60 minutes long usually, okay? Usually minimum 30 minutes. Usually, upwards of 60 minutes, right? There's a good probability that something happened in that 60 minutes that all of a sudden you stopped paying attention to what was going on in that conference call, right? All of a sudden, your kid walks by and you're like, oh man, all of a sudden you start playing with your kid and you got the conference call, but are you really paying that close attention to what's going on? Or all of a sudden your friend comes in the room or your dad or a family member or a friend or somebody and they say something to you and you're like, oh yeah, we'll eat dinner at this and this time. Okay, now you just lost concentration on what's going on there, man. Like, this is why you have to listen to it twice. Not only that, and not only is it like distractions from other people or pets or whatever that can, kind of take your mind off things, but also you can hear something on that conference call. This happens to me all the time. This is, the biggest thing that happens to me while I always listen to conference calls at least twice is there'll be something mentioned in that conference call. And all of a sudden, I'm like, my mind starts going boom, 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 boom over here, and I start getting fixated on whatever I just heard. And my mind's over here, and I'm like, oh my gosh, yeah, that's a big business opportunity. And all of a sudden, I'm starting to think about that, and I'm starting to add up numbers. Oh my gosh, if they expand over here, who are the competitors over there? Oh, they're trying to do this. And all of a sudden, meanwhile, the conference call's still going on, and my mind's, 10 miles over this way now. And so whatever is going on in the ears, I'm not even listening to it anymore because my mind's so far over there. And all of a sudden, I finally finish that thought after a minute or a few minutes go by, and then I'm back on the conference call again. But meanwhile, 3-5 minutes of the conference call, I just missed that. Something very important could have happened in that 3 or 5 minutes on the conference call, okay? Something very, very important. So, this is vital stuff, guys. You have to listen to it twice, okay? Something else on an investor relations page of a lot of great companies is what's called an investor presentation. We'll call it an IP. Let me see if my camera is going to stop. Oh, no, we're only 14 minutes into this. We're looking good, okay? Investor presentation. So not all companies have investor presentations on their, investor relations page, but some companies do. And I can tell you these investor presentations are incredibly helpful, okay? Absolutely incredibly helpful. These can, between all of this, between going all in all of this, right? You read a full 10K, and by the way, with the 10K, make sure you're not blind reading. What I mean by blind reading is you're going through the pages, but you're not retaining any knowledge because once again, your mind goes somewhere else. This is something that happens to me. This is something that happens to a lot of folks where all of a sudden your mind starts going to somewhere else. If you start blind reading that annual report, stop, take a break, go do something, come back, start reading again. And if your mind wanders off again, take a break. Like if it takes you a week to go through a 10K, that's fine, man. That is perfectly fine, okay? I can go through a 10K in about 3 to 5 hours roughly, but that's if my mind's fully there and I'm ready to rock and roll, okay? 10K, 10Q, conference call twice, an investor presentation. You should be at a place where you understand this company on a very high level. And if it's a growth company that could be your next $1 million stock, right? You should be able to, after you've gone through all this, have a very high level of understanding. If you don't, it's probably not in what's called your circle of competence, okay? This is something I learned from Warren Buffett. Your circle of competence, okay? We'll just call it the circle. Meaning essentially, not all businesses you're going to understand, okay? There's going to be definitely a good amount of businesses in here that you're going to understand at a very high level. You're just going to get it. You're going to understand why this company is going to grow so much in the future. But unfortunately, there's going to be some that are kind of in that gray area where you like almost get it, but you aren't quite there. And there are going to be some companies in some sectors, in some industries that you just don't know. You're just completely lost on, and they're way out there, and you're like, man, there might be something there, but honestly, I just don't know what these growth rates are. I don't understand why this company has a competitive advantage against this company over here. And that's fine, okay? There's no shame in that game. There's no shame in that game. There are companies I look into and industries I look into that aren't in my circle of competence, and I've been in this for over a decade now. I run a successful business, like I know business, I know these companies, and I'm not ashamed to say there are a lot of companies out there that I don't fully get, okay? And Warren Buffett will tell you the same thing. The guy is worth, if he hasn't given away so much money, he'd be worth well over $100 billion, right? This is very, very important. There's no businessman I know of out there that understands all businesses on a super high level. It just doesn't exist. So if you've gone through all that and you just don't get it, I don't care how much somebody says they love that stock and how much upside. Don't buy that stock. It's not worth it. The pharmaceutical industry is a good example of just an industry I don't have enough knowledge on. I can't quite wrap my head around those type of stocks to understand why this pharmaceutical company is going to be the next giant or something like that, right? Same thing with stocks like Nvidia, AMD, right? Nvidia and AMD, these type of stocks have gone up tremendously over the past 4 or 5 years, and I've looked into these companies, and Nvidia, I was in it for a little bit, but honestly, Nvidia I really shouldn't even have been in, even though I did make money, and I was fortunate. I was kind of like over there with Nvidia. It really wasn't in the circle, but it wasn't outside. I was like, I'm almost there, but it's just, I couldn't quite wrap my head around the opportunity there. AMD, this is a stock I looked into when it was like $2. AMD is in the 50s now, but my head just couldn't quite wrap around it. I was like, I think there's something there, but gosh, I just don't really know. I can't quite wrap my head around it. I looked into it again and I was like, dang, I just don't know. How this company is going to grow, X amount over the coming years. And there's no shame in that. The great thing with the stock market is there are thousands of stocks to pick from out there, thousands of stocks to invest in, okay? Which means essentially, if you don't understand this stock and this stock, you still got thousands and thousands and thousands of stocks to go through, which means for you, this is a massive advantage. Because I can guarantee you, when you're looking at this company, you're going to find some sectors, some industries that you understand on a very high level, and you're going to be in that circle of competence, and you can find that, okay? Now we know kind of research frameworks here and those sorts of things. Very, very important to understand this. And by the way, if you're somebody that's watching this video right now, and you're looking to scale your portfolio, okay? You're looking to, grow your portfolio from, let's say you got 10,000 or 20,000 or 30,000. You're looking to grow it to 100,000 plus, or you're somebody with, 100K in the market or something like that, and you're looking to grow it to 7 figures. Check out the first link in the description down there. And go ahead and get on a call. If you're approved, you'll be able to actually get on a call with somebody high up from my team. And we can actually talk to you about how to scale your account. We actually have some products out there that can actually help you do that, okay? Now, next thing we're looking at when we're thinking about a growth stock is we have to be going after a fairly big market opportunity, okay? Let's call it market op, okay? Market op. Very, very important if you're thinking about a growth stock, okay? And this type of stock is going to 5x, 10x. If you're getting in that type of stock that you think is going to grow massively, you usually don't want a company that's going after a niche, okay? A niche industry or something like that. Doesn't mean it can't work. It's just not as likely to work. You really need a company that's going after big things, a big growing industry, okay? An industry that's growing, okay? We don't want to get into a sector that is in decline. We want to get into a sector that is growing, okay? This is very important. And we would love to get the #1 player in that growing sector, okay? If we can get the #1 player in this space, we're talking about, okay, now we're talking a bit, okay? These are some of the things I'm looking at if I'm gonna find that next $1 million stock. Market opportunities, because think about it this way, okay? Let's go through something like, you know, Tesla, right? Since Tesla's a stock that's obviously, you know, we've been able to 5x, 6x our money in, you know, just a matter of 2 years on that stock, right? And let's kind of run through some of this. And by the way, you know, I didn't expect the stock to have gone up as much as it did, but sometimes that happens with growth stocks. They go up even faster than you thought, okay? But when you think about something like Tesla, it's going after a massive market opportunity, right? In terms of their main product, right? Automobiles, like massive category, just massive category, right? They're in a growing sector in terms of electric vehicles, right? Electric vehicles, some of us obviously feel like this is going to be the future, and all cars in the future will be electric vehicles, right? So they're going after a massive growing sector, right? They're the #1 player in electric vehicles. So as long as they continue to innovate, and as long as they continue to, you know, keep their lead, they're going to stay out in front of everybody. And guess what? They're going to just capture massive market. And that's why a company like this, you know, Elon Musk has gone on record saying, you know, he expects that company to grow revenues 50% plus, you know, outside of a recessionary year, a really bad year, something like obviously it's going on this year in Rona. He's talking about 50% plus revenues for as far as I can see. How do you get to that place? Like, how could you already have a big business like Tesla has, tens of billions of dollars of revenue, and expect your business to grow, you know, 40, 50% plus a year for as far out as the eye can see, as long as it's not in a recessionary year? How? Because you're going after a massive market opportunity in a huge growing sector, and you're the #1 player. And as long as you can just keep it going, and you keep the compounding growing, oh my gosh, all of a sudden you have this massive, massive company on your hands, okay? If we look at a stock that I've identified recently, okay? And I try not to talk about this stock too much now because it keeps pushing up the price every time I mention this one. But it's what I think will be my next $1 million stock. It's a stock called, you know, Planet 13. Some of you guys might know about it if you track the channel. This is a stock I started buying when I think it was like $1.20 or $1.40 or something like that. Very small company, OTC, smaller company than I usually buy. But when I looked at this company, I said, okay, this is a stock that's going after a massive market opportunity that's growing huge, right? There's a huge growing sector, right? MJ space, like, you know, if you know what Planet 13 does, they sell MJ. They have superstores. They have different products out there that are MJ related, right? This is something that's just started to get legalized on a state-by-state level very recently, right? In Canada as well, things have been legalized over time. In the United States, I think federal legalization is coming to the MJ market over time. So we're talking about, you know, the MJ market on the illegal market has been massive for the longest time. It's probably going to be even bigger, actually a lot bigger, when things are legalized, right? Growing sector, #1 player when it comes to their superstore experience, as well as potentially #1 player with their consumer brands over time. And so I'm looking at this stock and I'm like, this might have a little opportunity to end up being the type of stock that ends up, you know, 5x in there, 10x in our money over the next 5 or 10 years. This is so big when you're thinking about growth stocks, guys. You have to really have these three. And you know, if you're looking into growth stocks in the future, run a checklist with these three things, okay? You need to have all the other things I look for in stocks I teach to my private group and things like that. But these three things specifically are massive, okay? These three things are really big, okay? Now let's get into a fourth thing that's really big here, which is the CEO, okay? You know, if we were to just, you know, bypass this one and say this isn't important, it is extremely important. Great CEOs can 5x, 10x, 20x their stock prices over time. I've seen it time and time again from great CEOs that end up accomplishing things like this. CEOs that are so like steadfast in the business that they just understand the business on a high level and they just keep pushing. They're going after these type of things, okay? You know, I mean, obviously some names that will come to mind will be Steve Jobs, right? Steve Jobs with Apple. Somebody that just understood like how to continue to grow the business, focus on big market opportunities in a growing sector, right? This is something Apple's always done phenomenally. Always make sure we're like the #1 player there. You know, very important. And when we think about #1 player, we're talking about Apple always likes to compete at the high end. So it doesn't mean you have to be #1 player overall, but in your specific, you know, when you think about, let's say the smartphone market, right? Massive market, ton of competitors, and Apple's a #1 player on the high end. And the high end, because smartphones is such a big and massive market, like almost everybody in the world has a smartphone, right? This isn't a niche market. This is still a massive market opportunity, even though you're up here competing. That's something to keep in mind. You're not really niching down if everybody in the world needs something like that. Keeping that in mind, okay, guys? So you think about Steve Jobs, you think about Mark Zuckerberg. Obviously, you know, that stock went public at, you know, $38 back in, I think it was 2012 or so. That's a stock that here today is, you know, roughly 250 or so, let's say somewhere around there. And at its lows, after it went public, it actually went all the way down to under $20 a share. You think about somebody like Elon Musk, right? Elon Musk has done a phenomenal job growing Tesla over time. Tesla goes public. I think that stock was, I want to say it was under like $20 a share, right? Tesla, you know, here today is like $1,500 or whatever. Like it's, you know, massively valued compared to when it went public at like $20 a share. You know, those are just some of the big names. Obviously, you could think about somebody like Bill Gates, you know, the growth Microsoft had, oh my gosh, back in the day, especially. I mean, Microsoft's got back to good growth, right? They had phenomenal growth in the Bill Gates days. They hand the business over to Steve Ballmer. And Steve Ballmer never really was able to get that massive growth going really for the company. Again, unfortunately, until the company was kind of passed on to Satya Nadella. And Satya Nadella was actually able to grow that business to be a much, much bigger business over time. So, you know, the CEOs, really, really important, right? You think about Jeff Bezos, right? Somebody that's been able to grow Amazon from just a teeny tiny company when they went public to now, I think they have the second biggest valuation in the world, something like $1.6 trillion, right? Great CEOs can make all the difference in the world. And what do all these great CEOs have in mind? They all go after huge market opportunities. They all go after massive growing sectors. They all go after, you know, being the #1 player in that market, trying to be that #1 player. And they all have phenomenal CEOs, okay? Let me tell you about a stock I was involved with back in the day. I don't own the stock anymore. Made me a lot of money. And, you know, if I would have started investing even younger, it would have made me a lot more money. This was one of the best performing stocks from about 2002 to about 2020. One of the top performing stocks out there in the stock market. This stock didn't just 5x or 10x. This stock went up tens of thousands of percent from 2002 until 2020. Tens of thousands of percent, okay? This company is known as Monster Beverage Corporation today, okay? But back in the day, they used to be called Hanson's Natural, okay? I don't even know where to write anymore at this point in time, okay? This company used to be known as Hanson's Natural Beverage. It was like a small apple juice related company. They made like apple juice and some different juices out there and things like that. Super small market cap. Just kind of a joke of a business, okay? And the gentleman that actually took over the business, the CEO and co-CEO that ended up taking over the business, they understood there was this massive growing category because there was this company that was growing like crazy, and it was Red Bull. This company was called Red Bull. And they were under this new wave, which was called energy drinks, okay? Energy drinks, believe it or not, are something that's really gotten popular over the past 20 years. You know, prior to that, there wasn't really like an energy drink category, okay? So these gentlemen saw this, and they saw this company, Red Bull, growing like crazy, and they were going into this huge market opportunity in a massive growing sector, right? I mean, you think about market opportunity, it's drinks, right? Massive market opportunity. Everybody needs to drink something. You're going after a huge category. You're in a huge growing sector, which was energy drinks, right? And this company was a #1 player, and this company named Monster, they said, what if we go after this massive market opportunity as well? What if we go after a growing sector? Number one player, okay? And what this company ended up launching ended up being what's called Monster, okay? They ended up launching a product called Monster Energy, okay? Monster Energy. And this ended up growing into a company that went from being, you know, maybe a $60 million market cap to $30+ billion. Just incredible. They launched this product in 2002, and they focus on kind of, you know, putting the products in events and things like that. They watched what Coca-Cola did with their product. Obviously, you know, Coca-Cola obviously being, you know, a soda maker out there. And they looked at this. And so if you were looking at the stock, you know, let's say in 2003, 2004, you could have saw, oh my gosh, this company that's a you know, a juice maker historically is coming out with this product that's getting more and more popular. It's getting into more and more stores. It's in this massive growing sector that's probably going to grow for years and years and years to come. And oh my gosh, this company might end up becoming the number one player over time. They're already kind of emerging as the number two player, right? And you see a CEO and co-CEO making a move like this, you know, bells can start going off in your head, kind of starting to realize, oh my gosh, this might be a massive opportunity stock. And look at how small it is today. And think about where this company is going to be 10 years or 20 years from now as this category continues to grow. And if this is a number one or number two biggest player in this market, that, you know, because you can just start thinking about it and you think, well, Coke and Pepsi, and you thought about the competitive landscape. And this is where we come to the competitive side, okay? This is why I wanted to bring up this one. You think about competition, because competition is important if you want to achieve big things. And if you were looking at this company back then, you could have saw that Coca-Cola was non-existent in this market and Pepsi were non-existent in this market. And these are the two biggest threat companies if you're thinking about, if you're looking into this company in 2004, right? In 2002, they launched a product. You start looking in 2004, you're like, oh my gosh, this company's growing like crazy. You're doing your research on it, right? And you're like, oh, what about the competition? You're looking at this company, Red Bull, as competition, but the two biggest threats to you at that time are Coca-Cola and Pepsi by far. And they just weren't even threats. They were just kind of like, I don't know, asleep at the wheel, essentially. You know, Coke and Pepsi could have been Red Bull and Monster. And they just missed that opportunity because Coke and Pepsi, we're looking at it as, this is just a small business over here. We got this massive soda business and we keep buying out other companies and that's just some energy business over there, whatever, okay? And they kind of brushed off to the side and you could have saw, oh my gosh, man, we got like a free run at this, right? And this goes back to Tesla, right? Remember we were talking about Tesla earlier? Something I looked at when I looked at that stock from a growth perspective is, oh my gosh, competition non-existent. GM and Ford and Volkswagen and all these other companies, Toyota, Honda, they could have taken out this company a long time ago. But they were like, that's just some niche thing over there. And it wasn't until the past year or two they started taking this serious. Dude, that's way too late. Like you needed to be on this stuff 10 years ago if you really wanted to succeed. And then when Coke and Pepsi tried to come in this space many years later and started taking it serious, which they didn't start taking it serious till past 2015, they couldn't have success in this market because everybody was already used to drinking. If they wanted an energy drink product, they were used to drinking Red Bull, they were used to drinking Monster. And their Coke and Pepsi were like, we just missed a massive market opportunity because we brushed off to the side. And what ended up happening? Coca-Cola ends up buying a massive stake in Monster beverage because that was the only way they could succeed in this market. Let's just get a big ownership part. They bought like 20% or so of Monster Energy. Isn't that funny how it worked in the end, right? And that's something I identified with Tesla. The competition, non-existent here with this company. There's just not realistic competition. Everybody should have been focused on this stuff 10 years ago. You don't focus on it when it's already in your face. It's too flippin' late at that point. They've already, this company's already been branded electric vehicles and autonomous driving, things like that. If you're just going to start focusing R&D efforts on it now, it doesn't matter if you invest $10 billion in this space or $20 billion. It doesn't mean anything to you and then because you've already lost. You're too far behind the 8 ball now, right? You think about, obviously, imagine you look into Apple. Right around the time they launched the iPhone, okay? Let's say 2007, 2008. Now, Apple stock had already came back a lot at this point, okay? Apple stock had already come back tremendously at this point. When you think about this, Apple stock was a stock that was almost bankrupt. I mean, this stock was literally almost bankrupt back around 2000. Let me see. No, it would have been right around 97, 98. This was a company that some folks thought Apple was going out of business, right? And then I believe it was 1998. Apple got an investment from Microsoft, right? That ended up helping Apple save the business. And actually, that investment made Microsoft billions and billions of dollars as well, right? But let's imagine you don't look into it back then, because the company was almost bankrupt, and to get in at that time you would have had to be super brave and super confident and taking a lot of risks, right? Apple in 2007, 2008 was not nearly as risky. If I recall, the company was well profitable from their iPod business, right? As well as their iTunes business, as well as they had rejuvenated their computer business. Apple was on the up and up. They were a growing company. It was looking bright, okay? Then they come out with this iPhone product, right? In 2007, 2008. And this is a product that, if you really were observant at that time, this was a game changer. This was a game changer in the market, okay? So imagine you look at what was out there in the competitive landscape, right? And you think about it. If you were looking at Apple as an investment at that time, thinking about this as a growth stock, right? Wow, this company's going after a massive market opportunity, right? Everyone's probably going to have smartphones in the future, right? Once people experience this product, they're probably not going back to flip phones, right? And if you would have made that observation, obviously you would be successful. But it's like once you experience something so much better, you don't go back to the old thing, right? It's like once you drove a car, you don't go back to like, let me have horses again or something like that, right? Once you experience an electric vehicle, you don't go back to ICE vehicles. Once you experience an iPhone, a smartphone in general, a high-end smartphone, you don't go back to flip phones. It just doesn't work that way, right? So you look and you say, this company's going after a massive market opportunity. This company's going after a growing sector, which is huge, smartphones, right? Phones in general, right? This company is, as soon as like 2009 hit, it was clear they were the #1 player in smartphone category, right? They have a CEO who was clearly growing the business. He grew the business in the past, right? Left the business, it fell apart, came back to the business, got on the right track. And the competition was non-existent. If you looked at all the other players, what they were doing in 2007, 2008, 2009, 2010, 2011, there was no real competition. Apple didn't get in any real competition, really, until I think it was 2012 to 2013 when Samsung started to compete with them. They actually made some bigger smartphones, and some customers jumped ship or experienced Samsung for the first time or something like that, right? And so you think about that time period, Apple was just running by themselves, man. They were just running by themselves for years and years. And so Apple got to leapfrog everybody. They got to get that iPhone experience in everybody's hands. And everybody ended up, loving the product, loving the software. The software is what really made the iPhone in the end, and what continues to make the products to this day. It's not the hardware experience. Everybody's got a good camera on their phone, right? Everybody's got a 6-inch screen or whatever, right? Everybody's got a nice screen. Everybody's got speakers. It's the software experience, and they got everybody used to that software, loving that software, and they were in the clear, and they were set for the next 20 plus years, right? And they're still set to this day. And they became the biggest company in the world, the most profitable company in the world, right? All on the back of the fact that other companies just were not taking the competition serious enough, right? BlackBerry was trying to, compete in a different way, and it was like, BlackBerry, you're behind the ball, right? Nokia was just not even a threat. Nokia was still so focused on selling flip phones because that was what made Nokia successful, right? And you just look at that and it's like, you guys just missed a massive opportunity, right? You look what Bill Gates did with Microsoft, right? A company that you could have made tens of thousands of % of gains over time if you invest in that back when anytime, it went public or whatnot, right? There were plenty of big tech companies at that time. There were just different type of tech companies that could have easily emulated or did something Microsoft did. The competition just was asleep at the wheel. And this is what happens. The big companies fall asleep. The little guy comes up, steals market share, grows, bigger and bigger. If they're going after this, man, it's massive, okay? Same thing, happened with obviously, the FB over time. You look what, Jeff Bezos has done with Amazon. Where has Walmart been? Walmart's just started taking e-commerce serious in the past, I feel like the past 2 years. I've tracked Walmart forever. Used to be an investor of the stock back in the day, made, a little bit of money on the stock. But at the end of the day, Walmart, they should have owned Amazon. They should have owned Amazon. But Walmart was so caught up in paying attention to expanding retail stores rather than watching what Amazon was doing and being like, let's emulate this, man. Let's start taking online super serious. And this is why Amazon has beat Walmart and will continue to beat Walmart in the future, because Walmart lagged. And so Walmart went from being the premier, biggest retailer in the world to now they will always be #2 behind Amazon, because it's too late at this point to try to even think you're going to be #1. 10 years ago, 15 years ago, if they were taking this serious, dude, they would have had this market. Amazon wouldn't even have been a big thing at all. Amazon would have been fighting for number 2. And Walmart just missed that opportunity. So this is something that consistently happens with growth stocks, okay? So now we understand kind of the markets that you're going after and things like that, okay? Now we got to talk about the next big important thing, which is valuations, because as you know, financials are important. Obviously, the most important thing is, what type of opportunities are the company going after? What are the business fundamentals? But also, when it comes to these growing companies, people ask about valuations, because sometimes some of these stocks, a lot of these stocks, right, if it has phenomenal growth, it might be trading at a rich valuation, right? I mean, we see some of these stocks out there, especially right now, right, in this market that we're in right now. A lot of these stocks are trading at very rich valuations. And when you think about this, the valuations sometimes don't seem right. It seems preposterous. It seems ridiculous sometimes, right? So it's just a discussion we have to have on a very high level. Valuations. By the way, if you're newer to the stock market, I actually don't suggest you invest in growth stocks. I think they're too dangerous for most newer investors. Once again, you're free to gamble your money if you want and just stick money in something you don't really know what you're doing. But I can tell you from my standpoint, I was in the market for about 5 years before I even thought about investing in growth stocks. Why? Because of this right here, valuations. See, a value stock, you can look at things like a forward PE, right? And you can say, well, it's at a 14 forward PE. That looks pretty fair because the market in general is trading at a 20 forward PE. And this company is likely going to grow revenues 3% next year, and they grew revenues 4% last year. And so this is a solid. It's so much easier to value profitable companies, especially immensely profitable companies with long track records of profitability, and companies with low growth. It's so much easier to value them. What happens when all of a sudden you have to value a company that's trading at a 6,000 forward PE, okay? What happens when you get this put in your face? A 6,000 forward PE, 14 price to sales ratio, okay? What do you do now? Because if you're just looking at those numbers, you will never, ever touch that stock. I can promise you. And the problem we get into when it comes to growth stocks is many of these growth stocks trade at 100 plus forward PEs, which, by the way, the forward PE is the most important metric to me in the stock market, at least when it comes to value stocks, dividend stocks. A little bit of growth stocks, but not that important. And so the reason I couldn't get in growth stocks for the longest time was because I was trained as an investor, right? Let me look at time here, how we're doing. 16 minutes, we're doing good, okay? So when I came up in the game, essentially, I learned from Warren Buffett, and I learned about valuations, and I learned kind of what a fair, PE was and things like that. And then all of a sudden you're hit with this in your face, and you're like, no, I'm not touching any growth stock ever because they all look disgustingly overvalued, okay? Overvalued. It's the famous term that is coined to all great growth stocks out there. It's overvalued, man. You hear it consistently. Obviously, stocks like Zoom, stocks like Shopify right now, I feel like are the quintessential type stocks where people are talking about overvalued. Bubble stocks, right? Obviously, Tesla gets in that same category. A lot of folks say that stock's a bubble. Whoever's right in the end, we'll see whoever's right in the end there. I'm not there to debate that. But the fact is, those hit a lot of people because they look at it and they say Shopify is trading at a 10,000 forward P. That sounds ridiculous because the market trades at a 20 forward P or an 18 or a 23 depending on the time and things like that, right? And the market in general trades at price to sales ratios of 1.4 or something like that, right? And this one trades at a 14, or I think I saw Zoom recently was trading at a price to sales ratio, which is, price to stock versus revenues of, I want to say it was in the 70s or 80s or something like that. It was insanely high. That's not the way you value growth stocks, okay? Let me be very clear about this. You kind of can't even look at this stuff. And this is why it is frustrating for even somebody like myself that's a value, that was trained to be a value investor, because that stuff is not how you value a growth stock, okay? It is not, okay? How you really value a growth stock, because you really need to think in terms of what is the potential market cap size for this company over time, okay? What is the potential market cap size for this company over time? You need to think about 5-year out revenues Okay? You need to think about 5-year out revenues. You need to think about 5-year out net income, okay? And this is where it's so different from dividend investing, value investing. This is why it's so much harder for me to teach growth investing. And I've had to really think about this in the past. Like, how do I teach somebody to value growth stocks and those sorts of things? Because value investing, it's actually pretty easy for me to teach somebody, about look for this in dividend stocks, look for this in value stocks. But how do you teach somebody that a 6,004p is actually a deal on a stock? Because it sounds stupid, right? It sounds completely stupid. But the trick is you have to really, this is where we go back to, remember at the start of this video, we talked about the research work. Reading the 10Ks, the 10Qs, investor presentations, conference calls, looking into that industry on a very high level. All those things are paramount regardless of any stock you buy, but specifically growth investing, okay? Because you're never going to be able to figure out a potential market capitalization for this company, 5-year out revenue, 5-year out net income, if you can't quantify how big the business can be in the future, right? So the way I do it with some stocks, I'll give you 2 examples. We talked about Tesla and we talked about obviously my newer one, Plan 13. So one I've been in for a couple years, one that's a newer one for me, right? A 2020 buy, right? So let me think about how I figure something like that out, okay? So with something like Tesla, what I did, an exercise I did for that particular stock is I started to run numbers as far as well, what did I think EVs would grow to each year? Okay, what did I think EV growth would be each year? How big do I think, when would I think EVs would hit 5%? When did I think EVs as a percent of total cars would be 10%, right? I looked at the total amount of autos sold, okay? So total autos sold. And I said, okay, there's 17 million cars a year sold in United States. And there's 15 million roughly sold in Europe. And there's 21 million sold in China. I started running all these numbers and start going down the list. And I said, well, this is how many Tesla produced this year, right? And that was back in 2018. So I think I was looking at 2017 numbers at that particular time. And I said, well, they're probably going to start moving this many Model 3s in the future. And if you look at some of my old Tesla breakdown videos when I would say, Tesla stock's going to $3,000 in the future and whatnot, right? If you look at some of those old videos, essentially what I'm doing as far as exercises go is I'm breaking down the percentages and how many autos is Tesla going to likely sell from Model 3, and what about an affordable SUV they would come out with in the future, which obviously now we know is Model Y, right? And what if they come out with a pickup truck in the future? How many could they likely move in that market? And what type of market share did I think this company could have over time? That's a really big thing, the market share. And so I started running these numbers. I say, well, if they have 25% market share, and I feel like they'll have at least 25% market share because I understand the business on the high level, understand how bad the competitive landscape is, I understand the type of market share somebody like Apple commands in the United States and around developed world, and I kind of look at them as kind of a benchmark to where Tesla's going in their sector as far as electric vehicles in the future, right? And I start running all this and I'm like, okay, if they get a 25% market share, it's this number, right? And if they get a 50% market share in the future, then it's this number, okay? And I start running numbers and I understand the auto industry on a very high level because I've done a lot of study on it, okay? And so I look at something like this and I'm like, okay, 17 million autos a year sold now. Number's probably gonna go down in the future because of ride sharing, autonomous vehicles, things like that. So maybe the number in the future, maybe 10 years from now, there's not going to be 17 million cars sold a year. Maybe it's 12 million cars a year sold in the United States, okay? And that's in 10 years from now, okay? Now, if that's the case, right, and Tesla has a 25% market share, they're moving 3 million cars a year, right? If they have a 50% market share, which I think is very much a possibility as long as they keep their lead up and they keep, moving at the pace Tesla moves at, which is far faster than anybody else they compete with, right? As long as they continue to have that innovation, they should be doing 6 million just in the United States of America, okay? Just in the good old USA. Now, what about Europe? Now, what about China? Now, what about the rest of the world, right? And so you start running some of these numbers, and I'm like, this is just one facet of Tesla's business. And then there's the autonomous vehicle opportunity. Then there's in-app purchases that you can make on Teslas, right? And I start running all the numbers on this, and it's just, the numbers get so crazy that it's like at a $30 billion or $40 billion market cap, whatever I was buying the stock at, it was the deal of the century. If you looked at any metrics on it, if you looked at price to sales ratio, if you looked at things like, this is where people get really confused with this one, they were looking at what is Tesla's market cap versus General Motors, because General Motors sold this many cars last year and Tesla sold this many. So General Motors deserves It's a very, very scary word to use in the stock market when you're saying this stock deserves something. Nothing deserves anything in the economy, especially in the stock market. And people will be like, GM deserves a bigger market cap than Tesla. Tesla doesn't deserve this market cap. And it's like, dude, look at the future numbers. Look at what they're going to possibly be putting up in the future. This is where we're valuing the stock off of. You can value it off of what they're doing today if you want. Obviously, it doesn't make sense, right? Because this company is the future. And they have this massive competitive lead. They're going to probably continue to expand because these other guys just don't move as fast as this company. The other company's moving so much faster than anybody else, right? And so this is where you start to all of a sudden value a stock and you start to figure out this is a company that will likely have market capitalization of hundreds of billions of dollars 5-10 years out. If not, $1 trillion someday, right? And so that's when I start running these numbers and I start realizing this stock's a steal. I'm stealing money. I'm stealing money from this stock. Wall Street's so caught up in what numbers are they hitting this quarter, and I'm worried about what numbers they're hitting 5 years from now. We're playing two different games. Wall Street's playing checkers over here and I'm playing chess. It's a different game. So something to keep in mind, most of these Wall Street analysts, they don't have any track record of successful stock picking or anything like that. They don't know how to really value a growth stock. Most of these analysts didn't even have a clue on how to value Tesla, a company that was likely going to grow revenues 50% a year for, as long as I can see. They're used to valuing Ford, which is a company that's pretty much stagnated, right? And by the way, this Roni situation has messed up the autos worse than ever. And that's something I predicted as well in the past. I've done videos in the past, many, many years ago. Back when we were living in the 3-bedroom apartment back in the day, I'd do videos talking about the next time we had a major recession, the auto industry was going to get absolutely wrecked in that whole situation. Guess what? We're in a major recession right now, and the auto industry is getting absolutely wrecked. If you look at the numbers, a lot of these automakers are doing down like 20%, down like 30%, 40% numbers for these automakers, right? This is really important. Let me look at time. By the way, when I look at the time, it's because the camera shuts off at 30 minutes. And if you ever wondered, why does a DSLR shut off at 30 minutes? Why are they all forced to do that? It's so the tax rate can be lower. Because if it can record for longer than 30 minutes, it has to be called, I think, a camcorder, and they get taxed at a higher rate. Just a little FYI. Let me restart this. Alrighty, there we go. So that's that one. So this is how you value it, okay? This is how you actually start doing it. This is one specific example, and then you start figuring out the market capitalization of this company in the future is going to be ridiculously high, right? Now, let's run through a newer investment of mine, a 2020 buy, right? Let's talk about the Planet for a minute, a Planet 13, right? So this particular company, I'm looking at in the space, and how I value something like this, people look at it today and they're like, especially after the stock's gone up a lot, I think the market capitalization now is right around 300 million or so for this company, right? So let's say 300 mil. Now people are making what I call the cardinal sin, the same exact mistake with this one. And by the way, this one's a little more speculative in my opinion than Tesla was. So this one has bigger risk, but also bigger reward potential in my opinion on this stock. Tesla was, a 30 billion, $40 billion market cap when I bought it. This one is, when I was buying it, it was under $200 million market cap, right? But the cardinal sin people are making with this stock, in my opinion, is they're looking at what they're doing today and they're saying this company shouldn't be valued the way it is today because of what they're doing today, right? The same exact problem that happened with Tesla. The same exact reason I never bought Amazon stock back in the day, because I looked at Amazon, I was like, that forward P seems so ridiculously high. Look what Walmart trades at. Not realizing, oh my gosh, Amazon's going to take out Walmart in the future, as well as tons of other retailers, and all they got this Amazon Web Services business that no one's even looking at, that's going to end up being a Goliath, right? And that's the profit machine for Amazon. So, the cardinal sin people are making with this one, they're looking at this one, they're like, oh my gosh, it has one superstore, okay? One big superstore, big deal. And they're like, this company doesn't deserve to be at 300 mil. And if you're valuing growth stocks that way, you're just making a big mistake, okay? Because what I look at with this stock is I say, yeah, they got one superstore today. They're likely going to have 5 to 10 superstores within the next 5 years, okay? And what type of revenue can they likely do from those stores in the future? And what type of comp store sales are they going to likely be able to get from their current locations over time? Because it's not just about you open the location, but then you have to build up business. So hopefully that superstore is doing much more business 3 years from now, 5 years from now than it was the day you opened it, right? Because word has to spread, customers has to start coming to it, getting used to coming to that business and things like that, right? This is super, obviously, very, very important. So I looked at them. I said that, and I look at the Amazon Web Services of this business that everybody's missing are actually their owned brands, okay? Their owned brands. And I look at this massive category they're going after, this massive space, and they could potentially have the #1 brand in gummies. They could potentially have the #1 brand in chocolates, as well as, flour-related products in the MJ space. And so I'm looking at all this, and I'm like, this is a potential multi-billion-dollar company in the future. Yeah, it has, when I was buying it, I think it had $150 million market cap or $180 million market cap or something like that. And I was looking at it and I was like, yeah, that seems really rich. If you're valuing it just off of the one superstore today that does, let's say 60 million or whatever in revenues, okay? If you're just valuing off of that. But when you start running the numbers on where this company can likely be in 5 years from now, in 10 years from now, it's a whole lot bigger than it's at where it is at today. And so this is what I like to do as an exercise with these type of companies. Now there will be, and this is a warning, so this is why you can't just buy any growth stock, okay? How you know a growth stock is not a buy is if you're looking into one and you run those 5-year out net income numbers, revenue numbers. Once again, you can only figure out this type of stuff if you understand the business on a very high level, the market capitalization, things like that. And if 5 years out, okay, if 5 years out, the numbers still look silly, okay, and they don't make any dang sense, it's not a buy, okay? It's not a buy. If the numbers look silly 5 years out based upon the net income revenue you rose, you kind of drew up there, it's not worth buying, okay? I can tell you when I looked into Tesla, and that was once again, I think a $30 or $40 billion market cap, right? And I looked into this company, I said the valuation today looks silly for this company. But in 5 years from now, it looks silly in a good way in terms of it would be a steal and a half. If this company was still valued at $30 or $40 billion 5 years from now, it wouldn't even make sense because of the type of revenues this company will likely have in 5 years, the type of net income this company will likely have in 5 years, the type of market share this company will likely have in 5 years. Like, it just wouldn't make sense. So I knew it was a steal. The valuation in the short term did not look right. The valuation long term was like, I'm getting a steal in the stock. Same exact thing with Planet. I looked at this company, I was like, I'm paying $160 or $180 billion market cap for this company, whatever, right? And I'm looking at it, I'm like, today, yes, that valuation makes no dang sense. But oh my gosh, in 5 years from now, this valuation should be tremendously above where it's at today, because this will likely be a company that will be doing 300 million or 500 million in revenues and have brands that just by the brands themselves could be, commanding a valuation of $100 million or more just from several of these brands. You start putting all these pieces together, and that's how you start figuring out on a valuation basis if something's really a good deal in the growth stock space. And then you can go after it. Now, something growth stocks provide you, okay? And this is kind of a really good thing in my opinion, is volatility. And this is the last piece I want to cover in this video. Volatility. These growth stocks will usually be very volatile, okay, because they're growth stocks and growth rates change and everybody gets super positive on them and super negative on them. And when that volatility happens and you've done your full research on the company, when you get those dips, you buy those dang dips, okay? That's exactly what I did with Tesla. My cost base on the public account for Tesla is $227. I can tell you Tesla was well above 227 when I first started buying that stock. But as it dipped, I realized this still is a massive opportunity. I still love this stock. I bought heavier and heavier. And I capitalized on that volatility. And that's something you get in growth stocks. I mean, you can get in the stock market in general, but specifically with growth stocks, you have to take advantage of that volatility and you don't fear the stock going down in the short term. A lot of people fear it. Do not fear it. Beg for it, okay? Beg for it. Are you retiring tomorrow? More than likely, if you're watching this video, you are not retiring tomorrow. So whether your account says, 50K or 45K or 55K, does it make that much of a difference? You're not retiring tomorrow, right? And as long as you always have money to funnel in, hopefully every month, right? As long as you got your income and expenses, right? Then you're always in a position of power. And if you always have some sideline cash, you're always putting yourself in a position of power. So you can take advantage of this volatility, right? And if you cannot consistently put money in your account each month, ask yourself, be real with yourself. Do you have an income problem or an expense problem. Because if you can't put some kind of money in your account each month, you have one of those, okay? And then you just have to be real with yourself. Okay, I have an income problem. I need to get a better job. I need to start a business. I need to do something that route, right? Or no, I have an expense problem. I know a lot of people that make a lot of money. They never have any money to invest because they spend it all and they get lifestyle inflation. They can never funnel money in their accounts because they just spend all their money, right? Maybe it's an expense problem you have. But that's something so big. As long as you always got money to funnel in each month, and as long as you always got sideline money, you can take full advantage of this volatility and buy on dips. And it's not only me that does this. I've seen so many people in my private group and as well as friends, invest with this philosophy where they buy great companies when they dip, and they are able to make insane gains off those as those stocks come back. And over time, the valuations end up getting reflected in those businesses where they're going long term, and the gains are absolutely substantial. That is how I find my next $1 million stock. I hope you guys really enjoy this. Hope you got an immense amount of value. Please smash the thumbs up button for me doing this really in-depth video, and let me know in the comments if you enjoyed it. And also, if you're looking to scale your stock market account, you got at least 10,000 plus in the stock market, and you're just trying to scale the next level, check out the first link in the description down there. It's an exclusive link for you. You can go ahead and apply. You actually get on the phone with somebody high up from my team. We can talk about where you're trying to go in the stock market, where your goals are, and potentially products that actually we have out there that could help you tremendously in achieving whatever you're trying to get to in the future, because we've been able to do it with so many people now through the full systems I go through and my different products. So I hope you guys really enjoyed this. Thank you for watching and have a great day.